Welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because the global liquidity index is still grinding higher day after day, and we're getting very close to making new highs, which would be huge for Bitcoin and other risk assets. And just to be clear, this isn't supposed to be some perfect indicator that predicts every short-term move, but it's hard to ignore just how well it has captured Bitcoin's general trend over and over again this cycle. And I don't think this has been invalidated quite yet. The Global Liquidity Index indicator does differ a bit from the global M2 chart that everybody seems to be obsessed with. The global M2 chart only looks at the global money supply, while this indicator also includes central bank balance sheets like the Federal Reserve balance sheet, the Treasury General Account, the Reverse Repurchase Program, the European Central Bank, People's Bank of China, and the Bank of Japan, as well as other central banks. So I believe it gives us a much fuller picture than just global M2 alone. But similar logic here. I do think the global money supply going up is bullish for Bitcoin on a medium-term time frame. So I do believe price should go higher if we continue to see money supply expansion in this way. But I don't think we can just expect it to perfectly follow the exact path that global M2 is following, because Bitcoin has its own unique narratives and profit-taking and variables going on that stop it from having a one-to-one perfect correlation with a global M2. The good news for global liquidity and Bitcoin is that we're continuing to see weakness in the dollar, which is getting very close to making new lows. And this is not a coincidence with the fact that we have the FOMC meeting coming up very shortly here. The market is certain we're going to be getting rate cuts and is even entertaining the idea of a 50 basis point rate cut because of how much the labor market is weakening. So it's no surprise that we're seeing this weakness in the dollar. And this should be a strong tailwind for global liquidity and risk assets as a result. We do have an important CPI print tomorrow because, as we know, inflation is the main thing stopping the Fed from being able to cut 50 basis points. But the good news is that we did get a good PPI print this morning. This is a leading indicator for the CPI, and after a hot print last month coming in above expectations, it came in quite a bit below expectations today, which should hopefully carry over into CPI as well. And that will give the Fed more room to cut in this FOMC meeting coming up next week. We know the labor market is already telling them to cut with the slowly rising unemployment rate. There hasn't been a huge spike in layoffs yet. So there is no reason to panic that a recession is happening tomorrow, but it's getting harder and harder to ignore this labor market weakness. And I think it will force action from the Fed, especially because inflation is stabilizing. And if we have the Fed cutting rates with 3% growth and an S&P 500 trading near all-time highs, that's likely going to end up being the perfect backdrop for risk assets like Bitcoin to head higher. So, how am I positioning for this? Well, the market has been pretty flat recently, so no changes were made to my portfolio this week. Still quite happy with my cash position and still feel like I have plenty of upside exposure for what's to come. And as always, if you'd like to learn more about my portfolio automation system, mental models I use to navigate this market, or common mistakes I see so many investors making, you can check out the Crypto Enjoyers program and community in the video description. But for now, it's great to see Bitcoin continuing to hold major support levels while everybody continues to panic. This is exactly why Monday's free weekly report was called Science of Life. For now, Bitcoin has bounced off our previous range high and 20-week moving average. Inflows and outflows have flatlined recently, similar to the April 2025 bottom and the August 2024 bottom, because investors are quite uncertain right now. We're seeing something similar in Bitcoin's 30-day momentum. Whenever it's entered this gray region, it has corresponded with a local bottom because momentum has completely cooled off and sentiment has been reset. And we've seen the major local tops when momentum gets to the red region, which has not happened on this most previous rally, but happened in November of 2024 before the major cool off and 30% correction, and in March of 2024 before the major cool off and 30% correction. So it would make sense that because we didn't get as overheated this time around, we shouldn't need as big of a correction and cool off to reset. And speaking of resetting, we've also seen a reset back to neutral in one of the most popular on-chain indicators, the short-term holders' supply and profit. This indicator tells us what percent of short-term holders are in profit or loss. And the neutral region is going to be right around the middle where things are reset. We can see that right now, the short-term holder supply and profit has reset to neutral. It has gone lower on the deeper corrections where we saw just about all short-term holders no longer be in profit because of those longer corrections and consolidations. This one doesn't have to be as deep because, again, we didn't rally as hard to the upside. But it's nice to see that even the on-chain data is showing that we have seen a reset for the most part. Could things get crazier, and could we end up seeing a deeper correction like the previous two? That is always a possibility, but we don't need to do that to reset sentiment after the rally we've seen recently. And that's why I still have very high conviction that we're going to see one of these two outcomes. I'd say about a 50% chance we get final push into the rate cut, especially if the Fed starts hinting at 50 basis points. But I'd still put a 40% probability that we're going to see an extended consolidation period, maybe as more capital chases other assets like Ethereum or Solana and slows down Bitcoin. But I believe we still have more upside to go. And I still think it's maybe a 10% chance that the cycle is over and we should run for the hills because it's only downhill from here. But because these outcomes are going to depend heavily on what the Fed announces at next week's FOMC meeting, it's very hard to go all in on just one of them occurring, and it makes a lot more sense to be prepared for both. I also see a lot of investors getting excited about this chart, saying that Bitcoin is going to follow gold with a 200-day lag. But I think it's important to remember that correlation doesn't always mean causation. And I would love nothing more than for Bitcoin to continue following this path. I just don't think cherry-picking the past 5 years to try and make this claim is very reliable, especially because when you actually zoom in, there are some huge differences and fluctuations here, and they only look similar when you're super zoomed out. I don't know how actionable it is to follow this correlation and try to predict that Bitcoin has a high likelihood of going up because of what we're seeing for gold. Because although they both depend very heavily on currency debasement and loss of trust in the dollar and other fiat currencies, I do think that gold is a bit more of a risk-off asset that investors flock to during times of fear, while Bitcoin is more of a risk-on asset that does well when the stock market and economy are doing well. And seasonality is looking pretty optimistic as well. September has had a good start so far, but we're still early in the month. We do know that October and November are usually pretty solid, but again, because of this cycle being so reliant on the Fed's monetary policy, I do think the FOMC meeting is going to be much more important for Bitcoin than historic seasonality, because things are lining up a little bit differently this cycle in terms of the delay we've seen with Fed easing and the entire cycle being pushed back because of this monetary policy approach being different from Bitcoin's previous cycles. So we'll see what happens, but for now, Bitcoin is near the lower end of our expensive region. I don't feel the need to take any aggressive profits here, but also don't feel the need to buy aggressively at current prices. I'd rather just be patient and see what happens because there are also reasons to be cautious out there. We have been seeing a lot of selling by Bitcoin whales. One of the biggest spikes to the downside we've seen in balances for these large holders. Now, we have no idea what they're doing with that money. Some are rotating it to Ethereum. Maybe some are selling. Maybe some are diversifying. Maybe some are taking their huge wallet and distributing it to smaller wallets. There's really no way to know for sure. And even though these types of headlines get so much attention because of how scary they sound, I don't think the information here is that actionable, similar to what we're seeing from long-term holders selling right now. They've sold about 200,000 plus Bitcoin. But compared to previous profit taking we saw in November of 2024 and April and March of 2024, this has been very tiny profit taking from long-term holders by comparison. And I still believe price could go quite a bit higher before profit taking gets too aggressive from long-term holders. And because there are so many narratives and so many data points that we have to keep track of, I think it's a lot easier to focus on price action. If Bitcoin is able to reclaim this $112,000 previous range low as a false breakdown, that would be a huge bullish sign for a reversal. But we have to wait for tomorrow's inflation data and the weekly close before jumping to any conclusions and saying that the local bottom is in. We also have MicroStrategy continuing to buy more Bitcoin even though the purchases are getting smaller and smaller because of the weakness we've been seeing in the MicroStrategy stock price, giving Saylor less and less of an NAV premium to issue more shares. And because MicroStrategy is the main Bitcoin treasury, we're seeing this NAV compression carry into the other treasuries as well. And here's a visualization of MSTR's premium to NAV in the blue here. You can see how it actually peaked in November of 2024, but this chart starts in January of this year. As you can see, the MSTR NAV premium has been getting compressed more and more as we get deeper and deeper into the year because Saylor has been issuing more and more shares to buy Bitcoin with it. And that is compressing the premium. So it's no surprise that we've seen a big slowdown in corporate treasury buying recently, because if MicroStrategy's NAV premium is getting compressed, that's happening with the other corporate treasury companies as well. And you can see that compared to the buying we had a few months ago, and compared to the buying that MicroStrategy was able to do in November of 2024, that narrative has almost completely played out, and it's likely not going to be what takes us to the next level for Bitcoin. We're going to need some type of new narrative, whether that's Fed easing, which causes a resurgence of ETF inflows, or maybe another country announces a Bitcoin treasury approach, or something along those lines. But it does seem like the corporate treasury buying for the time being has played out. And speaking of corporate treasuries, Ethereum continues to look quite solid here, holding above all major support levels. I wouldn't be surprised if we held above 4,000 and held above those previous highs from the entirety of 2024. I know a lot of investors are waiting to buy 3,500 because that's near where the 20-week moving average currently is. But it's important to remember that it's rising week after week, and maybe by the time Ethereum actually tests it, it's a lot higher than where it is currently. But the most important thing is that as long as Ethereum maintains this bullish structure, I'm expecting price discovery above $5,000 to happen this year. It's no surprise that price has flatlined because we've been seeing quite a bit of ETF outflows, about $1 billion across 6 days. And you can see it here on the outflows that we see over the past few days. But this is pretty normal, and we've seen that for Ethereum on every single correction. You can see the blue ETFs here have almost completely flatlined in terms of inflows and outflows. Corporate treasuries have also taken a pause. We're even seeing Chainlink Gaming buying back their shares instead of buying Ethereum with cash because the stock is trading below the value of their Ethereum holdings. So, it does actually make sense to buy back the stock, but that's not good for Ethereum in the short term because that's less buy pressure for Ethereum. But it will make Chainlink a little bit more stable to perhaps buy more Ethereum once things recover and once Ethereum heads back to the upside. We're continuing to see it struggle here at this major pivot level and 100-week moving average, but I do believe it's just a pause before our next move higher like the previous two pauses were at the 50-week and 20-week moving averages. And similar to Bitcoin, there are always negative narratives as well. We've seen a huge drop in Ethereum's revenue. You can see that compared to what we had in March of 2024, Ethereum's revenue has been compressing and compressing. It peaked at about $500 million in 2024 per month, and right now it's closer to $40 million, which is an order of magnitude below where it was before. We've also seen a major cooling in the NFT market with a number of unique NFT buyers dropping below 200,000 in the first week of September. This peaked at 487,000 just a few months ago in June, and it has gotten so bad that OpenSea is now announcing an NFT reserve with their first by being a CryptoPunk. But this is nothing new. This is exactly what makes a market. If you want to find bullish narratives, you can easily find them. If you want to find bearish narratives and you want to be bearish, it's very easy to find narratives for that bias as well. And this has happened for Ethereum and Bitcoin so many times, as you can see here with Ethereum dying 151 times, so far based on the Ethereum obituaries and the articles that get tracked there. But there's a lot to be optimistic about as well. We're seeing more and more Ethereum adoption and Layer 2. Ethereum continues to be by far the most dominant chain in terms of stablecoins, adding $1 billion almost every day last week. The chart has gone absolutely vertical for the stablecoin supply on Ethereum, now crossing 165 billion. Same thing with tokenization as well. Whether you look at the tokenization of gold or tokenization of stocks on-chain, everything seems to be happening on Ethereum. But we are hedging our bets with some Solana as well, because it is the clear number 2 here. Nothing else even comes close to these two chains. So, we're hedging the Ethereum more decentralized Layer 2 approach with the slightly more centralized high-throughput Layer 1 approach that Solana is taking, which is prioritizing low fees and amazing user experience. And by holding both, we're hedged. Either way, Solana continues to look good, closing above our range high. Next target is the 2021 high at $260. And with these treasuries being announced and ETFs around the corner, it's very hard for me to not be optimistic on Solana at this phase in the cycle. Solana Bitcoin also looks very solid, getting very close to reclaiming its previous range low, which would be huge on its Bitcoin pair, and hopefully we can do that by the end of the week. It's now above its 50-week and 200-week moving averages, which is a great sign, and we see Solana starting to catch up to Ethereum and Bitcoin quite quickly. On the past 1-year rolling performance, Solana is exactly where we want it to be as a higher risk asset, outperforming the lower risk assets like Ethereum and Bitcoin. And as I've been saying, by the time this cycle ends, I expect Ethereum to be outperforming Bitcoin and Solana to be outperforming Ethereum before all is said and done. But for now, we just need to make sure that Bitcoin holds this major support level. Hopefully, we get a good inflation print tomorrow, which leads into a bullish FOMC meeting next week. But we'll continue to take things 1 week at a time and see what happens. And as always, the federal government is still running huge deficits. That trend continues to worsen year after year. Exponential debt growth means exponential money supply growth and currency debasement, which is bullish for risk assets we price in fiat currencies like the S&P 500 fixed supply risk assets like Bitcoin. But as always, let me know what you expect. Thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you in the next one.